Today is the 7th of June 2021. My name is David Hickson, and in today's market update I'm going to be taking a look at the NASDAQ and also a quick look at the S&P 500. I'm going to be discussing what I have whimsically called the gathering of the FLDs, which is something that Hurst described as FLD congestion, which is something that is happening in stock markets around the world at the moment. Before we take a look at the markets, I must ask you to please make sure that you have read and understood these disclaimers. Let's start by taking a look at the NASDAQ, which has the clearest phasing analysis in my opinion. You can see the big 54-month cycle trough over here in March of 2020, the 40-week cycle trough at the end of October or perhaps even the beginning of November of 2020, the recent 20-week cycle trough and the 80-day cycle trough. And of course the 18-month cycle nest of lows, which is what we are expecting to happen next as price moves down into an 18-month cycle trough. In my previous market update about the NASDAQ, I mentioned that the NASDAQ was expected to find resistance at the level of the 80-day cycle FLD. I didn't take the time to explain why that was, but I did ask in the description under the video why you thought it might be that price was expected to find resistance at the 80-day FLD, and many of you responded perfectly correctly that it has to do with the sequence of interactions that I have observed between price and the FLD. So let me zoom out here and explain to you exactly what I mean, and let's take a look at this sequence of interactions. I should point out, as I often do, that this is not something that Hurst himself ever mentioned. It's simply an observation that I have made over many years of watching the way in which price interacts with the FLD, and this is the way that it works. When we plot an FLD on our chart, and there is of course an FLD for each and every cycle in our nominal model, when we plot that FLD we will observe a fairly regular sequence of interactions between price and the FLD. And the way that it works is that we start with a trough that is of a magnitude at least 2 degrees longer than the FLD that we are plotting on our chart. So in this case we are looking at the 80-day cycle FLD. There is a trough of the 80-day cycle, but it is also a trough of the 20-week cycle and the 40-week cycle, which is of course a trough of 2 degrees longer in terms of its magnitude. Starting from that point, we observe the way in which price tends to interact with the FLD. The first thing that usually happens is the price crosses above the FLD. That is labeled an A category interaction, and we generate a target as a result of price crossing above the FLD at that point, which in this example, as you can see, was fairly easily met and even exceeded. The next interaction that we generally observe is the point at which price comes down towards the FLD and very often finds support at the level of the FLD, which it does at about the same time as the first trough of the cycle upon which the FLD is based forms in the market. So in this case, at the time that the 80-day cycle trough formed in the market, we expected what we label as a B category interaction, where price comes down and finds support at the level of the FLD, which, as you can see, is exactly what happened over here. The next interaction is very simply when price moves away from the FLD. We label that a C category interaction. You will notice that there are often other interactions that are happening in between the ones that I am labeling. One of the reasons for that is because of the multiple cycles that are influencing this price action, and each one of these FLD lines provides an important level at which the market will often find support and resistance. And so we do sometimes find that price will interact with the FLD at times that we aren't expecting it, such as over here. The longer the cycle that the FLD is based upon, the more often you will find these additional interactions happening. But the next interaction in our sequence that we observe across all FLDs is the D category interaction, where price crosses down below the FLD on its way down to a trough of the next longer cycle than the cycle upon which the FLD is based, which in this example is the 20-week cycle trough. We label that interaction the D category interaction, And again, we can generate a target on the basis of where price crosses below the FLD, a target which is usually met as the market forms the 20-week cycle trough. The next interaction is where price crosses back above the FLD in question, following the trough of the cycle 1 degree longer than the cycle upon which the FLD is based. That is labeled an E category interaction, and again we can calculate a target for that price interaction. We're going to come back to that in a moment because that is an interesting target for us to look at. The next interaction is where price crosses down below the FLD in question. We label that an F category interaction, and again we can generate a target on the basis of that interaction. Then we have, you guessed it, a G category interaction where price is expected to find resistance at the level of the FLD before turning down on its way to forming a trough of magnitude at least 2 degrees longer than the cycle upon which the FLD is based. And so that is the detailed explanation of the reason why we expected the 80-day FLD to provide resistance. Now, before we take a look at whether it did, let's zoom in and take a look at these targets that have been generated since the 20-week cycle trough formed. The first is this one over here, where price crossed above the FLD in our E category interaction, and we calculate the target by measuring the distance from the recent trough up to the crossing point and extending it to the upside. I have done that calculation, and the result is a level of 14,168. I've placed those crosshairs at roughly that level, and you can see that price failed to actually reach that target, although it did get very close to achieving that target. The fact that it failed to reach that target might be an indication that there's a little bit of bearishness creeping into this otherwise very bullish market. But now let's take a look at what happened this past week. As you can see here, on Wednesday, price was a little below the FLD, and on Thursday when it opened, it had actually jumped over the FLD because of the fact that the FLD crossed below price overnight, or in between those two bars. And indeed, on Thursday, the 3rd of June, an automated tweet went out alerting us to the fact that price had touched the FLD. And so at this point on Thursday, I was certainly expecting price to find resistance at the level of the 80-day FLD. On Thursday, price moved down, but on Friday, it bounced straight back up again. So what happened? What happened to that resistance? Well, the first thing to point out is that resistance and support provided by an FLD is what I often call approximate resistance or approximate support. I know some people find that a difficult concept because they expect financial markets to be very accurate and they expect targets to be precisely met. A Hurst cycles analysis is not a very precise process. There are so many influences on the price actions of financial markets, and many of them are fairly emotionally driven. And you can see in this chart in front of us now, the point at which price came down and crossed below the 80-day FLD was a period of 4 days in which price came below the FLD, then bounced back above it, then below it again, above it, before finally capitulating and dropping down below the FLD. This is simply a fact of life when it comes to these FLDs. But what is happening here? There's a very important point to make, which is why I have called this video the gathering of the FLDs. Hurst spoke about the fact that often FLDs will form congestion zones where there are many FLDs all bundled up together. In a moment we're going to take a look at them. But before I shock you with the number of FLDs that are currently influencing price, let's take a look at a very simple explanation of what is happening. Can you see at the foot of the chart there is a 20-day nest of lows? What does that mean? That means that we are expecting the 20-day cycle to form a trough at about this point. There is the 20-day FLD. I've just been through the sequence of interactions between price and the FLD. And this trough here in the middle of May was a trough of 80-day magnitude, which is where we start identifying the sequence of interactions, because it is a trough of magnitude 2 degrees longer than the FLD that we are considering. And so here we have our A category interaction. As a matter of interest, the target for that A category interaction was 13,777 or 13,777, and price reached up to within 1 point of that target on Tuesday of last week. What is the next interaction that we expect? I have just been through it with the 80-day cycle FLD. It is, of course, the B category interaction, and that is an interaction with price where we expect the FLD to provide support to price at the time that the 20-day cycle trough is forming. And so what we had happening at the end of last week on Thursday and Friday is a perfect storm, if you like, or a gathering of the FLDs. We have the 80-day FLD, which is providing resistance to price, but we also have the 20-day FLD providing support to price. In these market update videos, I generally display one FLD at a time because I am trying to explain the basic concepts and make things as simple as possible in order that you can understand and track what is happening in these analyses. But of course, a Hurst analyst actually needs to watch every single cycle's FLD. How do you do that? Well, you can simply display them all on your chart. And there is the shocking truth about what is actually happening at the moment in terms of our FLD interactions. I can move my mouse around and highlight some of them. Can you see what has happened here? Not only do we have the 20-day FLD providing support, but the 40-week FLD has also provided support. In my previous market update about the NASDAQ, I spoke about the way in which price had found support at the 40-week FLD several times recently. And here you can see those times again. 1, 2, 3, and 4 times recently where price has found support at the level of the 40-week FLD. We also have the 20-week FLD, where price also found support on Thursday. So how do we make sense out of all of this? There are so many FLDs. And this reminds me of a comment that was made by one of the beta testers before Sentient Trader was even released to the public. It was still in testing, and it was called the Hurst Trader in those days. And one of our beta testers mentioned that the charts looked a little bit like the kitchen sink that had everything thrown into them. Because in the very early days of Sentient Trader's life, you couldn't individually select which FLDs were displayed. They were all displayed on your chart. Because when you are working with Hurst cycles, you do need to keep an eye on all of those FLDs. And my argument was, well, you just need to be watching those FLDs. Of course, it made a lot of sense to be able to hide most of them and focus on one at a time, which is what Sentient Trader has been doing for many years. But it is very important to keep an eye on all of the FLDs to really understand what is happening in the price action. So let's zoom out, and I will hide all of these FLDs, and let's just focus on one of them. The 40-day FLD is providing us with some useful information at the moment. And the reason for that has to do, again, with the sequence of interactions. We have recently seen an 80-day cycle trough, and so we had a D category interaction, and that was followed by an E category interaction for the 40-day cycle. And so a target that we need to be looking at in terms of the 40-day cycle FLD is right up at a level of 14,407. Is price going to reach that level in terms of achieving that target? Well, now we need to consider what is happening with all of the other cycles. And one way in which we can do that is by taking a look at our semicircles and considering what the pressure is on the 40-day cycle. In order to do that, we take a look at the cycles longer than the 40-day cycle. The 80-day cycle at the moment is still moving up. The 20-week cycle is now moving down, the 40-week cycle is now moving down, and the 18-month cycle, which is all the way over here, is also moving down fairly strongly into the 18-month cycle trough, which is expected fairly soon. And so the pressure of the longer cycles on this 40-day cycle is fairly bearish, as you can see, and so the chances are that we will not see that target. In order to really fully appreciate what is happening in the market, we need to do the same kind of logical reasoning with each one of our FLDs. But I'm not going to do that here. What I will do as a last consideration in terms of the NASDAQ is display the composite model line, which is a line that combines information that we have for each one of the cycles in our analysis. And we can see that we are expecting price to rise and form a peak a little bit ahead of us. And then, of course, we are expecting price to come down into the 18-month cycle trough, which according to the composite model line is not likely to be a very big move down, as I've mentioned in several previous market updates. But what we need to do, of course, is track the way in which price is interacting with each one of the FLDs and track the point at which the market begins to turn bearish, which it has not done yet. Now let's take a quick look at the S&P 500. The analysis is not as clear in the S&P 500. Look at this very staggered nest of lows for the 18-month cycle trough that lies ahead of us. That might mean that the analysis is not quite as good, or it might simply mean that the cycles have not been as clear in the S&P 500 as they have in the NASDAQ. But let's take a look at some of our FLDs to see what information they give us. First of all, here is the 80-day cycle FLD. Now you will remember that in the NASDAQ, the 80-day cycle FLD was expected to provide resistance. It's doing something very different in the S&P 500, as you can see. The 80-day FLD has been providing support to price for a very long time. Even at the 20-week cycle trough way back in March, price was finding support at the level of the 80-day FLD. Look at that extraordinary period of time. It was 4 or 5 weeks at which price found support at the level of the 80-day FLD. And at the recent 80-day cycle trough, it again found support, not once but a few times. And on Thursday of last week, price again found support at the level of the 80-day FLD. So what is happening here? It's very simple. There is a different cycle picture. Although the analysis is very similar, the cycle picture is slightly different. FLDs are very useful, but there are times where price is so bullish or so bearish that it fails to actually cross above or below the FLD, which means that the idea of the FLD providing resistance at a particular point doesn't even apply because of the fact that price is not below it. What about the 20-day FLD in the S&P 500? Here we do have some useful information because, again, price is bouncing out of an 80-day cycle trough. And so here we have our sequence of interactions. Here is our A category interaction, which provided a target of 42.66, a target that has not yet been met. And again, on Thursday of last week, price found approximate support at the level of the 20-day FLD. You will notice, interestingly, that Sentient Trader has positioned a trough of the 20-day cycle a little earlier than the point at which price found support at the level of the FLD. The reason for that is because the analysis process is very complex, and we certainly do not only use the way in which price interacts with the FLD, which I must remind you is something that was discovered sometime after Hurst actually originally defined the FLD. We do not only use that information in order to perform our analysis. So what is the bigger picture outlook for the S&P 500? Well, we have some targets to the upside to look for here. 42.66 is the 20-day FLD target, and 43.44 is the 40-day FLD target. Are those targets going to be reached? Well, we don't know, but again, we are expecting price to come down into this 18-month cycle trough over here, and there is some bearish pressure on both of those cycles. If I display the composite model line in the S&P 500, you can see that the result of all of the cycles that have been found in the analysis indicates that we are expecting price to turn down and come into this 18-month cycle trough. You must remember that, of course, the composite model line is based upon the analysis that is on the chart, and so it is no surprise that it is showing a drop into the 18-month cycle trough, considering that there is a nest of lows for the 18-month cycle lying ahead of us. I do hope that you found this market update interesting and useful. If you have any questions, please put them in the comments below the video. I look forward to hearing from you.